Good to see you, Scott.
So what is your reaction to this incredible rally that we saw today on that better than expected inflation report?
Well, I've been bearish for a year and a half or 2 years, but we keep our portfolio hedged, so it doesn't mean a lot from the net worth of our portfolio or IP too much. But I am still very or quite bearish on what is going to happen. A rally like this is, of course, very dramatic, to say the least, very dramatic. But you have them all the time in a bear market, and I still think we're in a bear market. You have these rallies because it's almost like a commodity. There's only a certain percentage that actually trade it or make that final move in it. So if you take the population of stockholders, there's only a small percentage that trade like this or move it. And when the market goes down, you have a short interest builds up. And then when you have any news, it suddenly propels this. So I do think it's certainly dramatic and maybe exciting, but I don't really think it changes my opinion on the basic problems that we have.
Why are you so negative on the market?
Well, whenever you have higher interests that have moved as they have here, and they really have moved quite a bit, and you have an inverted yield curve, you're getting really treasuries at a 5% yield, close to a 5% yield for relatively short-term treasuries. You are going to have a recession. And I think you do have a recession already. I mean, if you looked at the earnings of a lot of these companies, they're pretty bad. And I think a lot of these companies are cheap, by the way. And I think a lot of money will be made if you own certain of these, I like to say the Graham and Dodd type companies, not so much the high-tech companies. If you own them, they're dirt cheap, and eventually you'll make money. But I think there's a way to go down because I don't think inflation is going away to begin with, not for the near term. And I think you're going to have more of a recession, more of an earning decrease. And that's basically why. I think, to begin with, I do think you're going to have more wage inflation. A lot of people don't want to work. I mean, it just comes to it. You have people now. The youth, I mean, you just saw this election where a lot of Democrats won where you didn't think they were going to win. And I didn't think that a lot of them would win. But what you do have is a lot of, quote, the youth, they say in quotes, the youth, vote. And when you think about it, if you don't have to work and you've been geared to that, you're going to have wage inflation because, by definition, people get older, they retire, and you have to fill that in. So you have that situation here. So you got wage inflation. You certainly have housing now going down. You have the net worth of the median household in this country. The net worth of the median household is maybe $100,000. And even that is in question. Even the households that do have a net worth of more than that, their housing is going down and the market has gone down for it. So you have all that put together. You have higher debted companies too, because you take a lot of these companies have borrowed money over the years and bought back stock, and they still do it. They still do it. I think that's dangerous because now they're encumbered with the debt they have to pay on the money they borrowed to buy back stock. So I just think there's a lot of things that have to happen to turn this economy around, to get us out of the recession.